So we've been seeing a lot of headlines about the bond market going up and why it's a worrying indicator. Like here, it says US Treasury yield spike has investors rethinking the rest of the world. But with these headlines, I'll be honest, I really didn't know about what the bond market really indicated, what the numbers meant, until maybe like a few weeks ago. But with how this political climate is just moving at breakneck speed, I figured I would make a video kind of talking about the little research I have done on basically what this means. Do these headlines matter? So let's just get right into it. As always, if you like this sort of content, make sure to like and subscribe. That helps out the channel a ton. I'm really going to try to get the ball rolling on this channel. So yeah, if that interests you, go hit those buttons. So first and foremost, is it bad when the bond market goes up? And well, it kind of depends. Historically, we have seen high bond rates before. Even if we look back at like 2023, we're at similar rates as we were back then. But unfortunately, looking at the bond market in a vacuum, it's mostly useless. It more depends on how it correlates to other markets. So if we look here, around October of 2023, about 5%, almost exactly where we are at today. If we look at the stock market around that same time, we entered a massive bull run. This was really good returns up until, inauguration. But so this was not a sign of a worrying indicator. Bonds are up, stocks are up. So we need to talk about what bonds are. Bonds are seen as a near zero risk investment. Essentially, it's just a way for the government to borrow money from whoever's willing to put money into this. And you get a guaranteed rate of return. It's just basically a loan with the government. This rate of return is almost always lower than what's expected from the stock market. So what typically happens is when people see a healthy stock market, they put money into that. When people are uneasy about the money, they put money into bonds. When the stocks go up, less people are buying bonds, which means the rate of bonds has to go up because the government needs to incentivize people with a better rate to take on more debt. So naturally, the opposite side of this is when stock markets go down, bond rates typically go down as there is a more demand for a low-risk investment, so the federal government can get away with locking in a lower rate. But when markets actually stray from this pattern, it can be a bit worrying. If stocks go down, but bonds are going up, this indicates money isn't moving between the two like it normally does. This could be the result of two different things. People are selling out of the market and they're holding cash, which means lower economic activity. Or people are selling out of the market and placing it into a different country's economy, which is seeming like it could potentially be the case here. We're seeing a big amount of money get moved from US defense contractors to European contractors, as NATO countries don't feel comfortable tying their defenses to the US right now, which is just one example, but I'm sure there's other ones. But overall, these numbers are indicating a lack of trust in the future of the US economy, and people are moving their money out of the country. This can have some very major ramifications. We have known that the US has had a ballooning debt crisis for a long time. I don't recall a time in my life where it wasn't something people were scared about. But this admin is just adding fuel to the fire at a rate that's just never been seen before. We are pivoting to this hard isolationism, just like with things like the sweeping tariffs that are taxing our businesses at just such a higher rate. This is grinding industries to a halt. We are losing global influence as that big brother type. Countries are relying more on themselves instead of the US for defense. And finally, it's just an air of uncertainty that surrounds our entire economy now. No one knows what's going to happen next. And when we're talking about people investing millions and billions of dollars into something, no one likes to just stock that money into something with this level of uncertainty. And it's kind of just a perfect storm to explode our debt. a recession's essentially going to happen, right? Like we are purposely shrinking our economy, and I don't think we are going to see GDP growth over the next 2 quarters once those numbers come through. I know they kind of like changed what the definition of a recession is, but I'm just going with the traditional recession is indicated by 2 consecutive quarters of decreased GDP. But essentially, that's going to tank the value of these stocks. We are no longer allies to many countries, meaning they don't really want to service our debt, which is going to result in higher interest rates as bonds go up as less people are buying them. We are slashing our tax revenue base with this new budget really, really hard, which is going to make us want to take on even more debt, which is now also going to be at a higher interest rate. We are going to be pretty alone when it comes to our relationships with other countries, which means we're probably going to have to spend even more on a military. I know Trump was already talking about how great it would be to have a $1 trillion budget for defense, and, well, that's just going to make us take on even more debt, and that's going to be a higher interest payment because bonds are up, and it just keeps going on and going on and going on. It's just cannibalizing itself. And yeah, I don't see how they can course correct here, and I don't think they will. I think that's just kind of what they're going for, and it is going to be rough. So that was just essentially my research so far on bonds and the markets and all that stuff. I know that's probably boring, but if you learn something, or if you like my opinion on this, or maybe I'm just dead wrong and you want to tell me something, or maybe I just missed something small that you want me to be aware of, make sure to leave a comment. I'm just really interested in this stuff. I like being able to research this stuff and make these videos, and hopefully I can get a little bit more consistent with these videos. But as always, have a good rest of your day.